What if I told you that the single most powerful skill in trading has nothing to do with indicators, chart patterns, or the ability to predict where the market will go next? What if the real secret, the one that gives traders a genuine edge, lies in something far more subtle and far more difficult to master? Apathy. Not the cold, dismissive kind people misunderstand, not the I don't care mentality, but a disciplined, strategic form of emotional detachment that frees your mind from fear, greed, panic, hesitation, and all the internal storms that pull traders off course. Most traders don't lose because they lack knowledge. They lose because they can't silence their emotions when it matters most. And today, we're going to dive into what I call the art of apathy, a mindset that helps you regain clarity, consistency, and control. If you've ever exited too early, held too long, panicked on a dip, or froze during a perfect setup, then this message is speaking directly to you. Let's begin this journey together. Invisible chains. Why emotions dominate your trading. Before we explore how apathy becomes an edge, we need to understand the emotional battlefield inside every trader's mind. And as we step into this first topic, you'll quickly see why emotional dominance, not poor strategy, is the main culprit behind inconsistency. Fear and greed are not just emotions. They are ancient survival mechanisms. Fear tells you, get out now, protect yourself. This loss will hurt. Greed whispers, hold longer. You can make more. Don't miss out. Neither emotion is rational. Neither emotion cares about your trading plan. Both emotions want to overpower your logic, because that is what they evolved to do. Let's make this real. Picture a trader entering a perfectly valid setup. The market dips slightly. Nothing unusual, nothing dangerous. But suddenly, fear spikes. Their breathing shortens. Their mind races. They close the trade. Moments later, the market rockets in the original direction. It wasn't the plan that failed. It was the emotional reaction. Or take the opposite scenario. A trade goes green immediately. The excitement hits. Dopamine kicks in. Suddenly the trader stops following the plan and decides to just hold a bit more. And then the market reverses. What should have been a win becomes a frustrating loss. This is the emotional trap nearly every trader falls into. And speaking of dopamine, this is where trading becomes even more dangerous. Every small win gives you a dopamine spike. Dopamine creates cravings. Dopamine tells you, do that again right now. This leads to impulsive trading, overtrading, revenge trading, and unnecessary risk. Modern platforms amplify this cycle with flashing colors, instant execution, and constant stimulation. It becomes less like a profession and more like a casino. But here's the important part. Once you understand how emotions hijack your decisions, you're ready to learn the power of true apathy. Apathy misunderstood, what true detachment really means. Now that we understand how emotions trap traders, let's move into the second major theme. And in this part, we'll clarify one of the biggest misconceptions in trading psychology. The meaning of apathy. Apathy is not indifference. Indifference means you don't care about outcomes. Apathy in trading means you care deeply about execution, not emotional reactions. True apathy is deliberate emotional distance. It looks like staying calm during volatility, allowing the market to move without personal attachment, following your plan regardless of temporary noise, refusing to let fear or greed dictate your decisions. It is not about caring less, it's about caring correctly. A perfect analogy is the surgeon's mindset. A surgeon performs high-stakes procedures where mistakes can be life-threatening. Yet a great surgeon is emotionally detached during the operation. They rely on training, rules, and precision, not on impulse or fear. They don't panic. They don't rush. They don't let emotion cloud judgment. A great trader must operate the same way. Trading may not involve life or death, but the psychological pressure can feel intense. Detachment becomes your shield. And one of the simplest, most powerful expressions of trading apathy is the idea, set it and forget it. This means defining your entry, your stop loss, your take profit, your risk, your reason for the trade before you enter the market. Once the trade is active, you don't negotiate with yourself, you don't improvise, you don't emotionally interfere. You follow the plan you created in a logical state. And now that we've clarified what apathy truly is, let's continue into the practical world, where apathy becomes a usable trading tool. Architecting your apathetic edge. Practical strategies. Let's move into our next major topic. How do you actually build apathy into your trading routine? Because emotional detachment is not a personality trait, it's a skill. And like any skill, it can be trained. One of the most powerful tools is the pre-mortem. Before entering a trade, ask yourself, if this trade goes wrong, what emotional reaction will try to control me? If it goes right immediately, what temptation will appear? What is the emotional mistake I am most likely to make here? By predicting the emotional traps in advance, you weaken their influence. You enter the trade with clarity instead of emotional vulnerability. Another tool is journaling for detachment. A powerful journal doesn't just record results, it documents emotions. Write down what you felt, what thoughts appeared, what fears showed up, what temptations whispered, what impulses tried to sabotage you. When emotions are put on paper, they lose control. They become data instead of internal forces. And of course, technology can support your apathetic approach. Use automatic stop losses, conditional orders alerts, OCO brackets, rule-based automation. These tools prevent emotional interference. If your plan says take profit at X, automation executes it. Even if your emotions beg you to hold longer, this is how apathy becomes effortless. Now, as these practices take root, traders begin to notice powerful changes far beyond improved execution. Let's move into those deeper effects, the unseen benefits, beyond just better trades. As we progress into this next topic, something becomes clear. Apathy does more than stabilize your trading performance. It reshapes your entire trading experience. One of the biggest benefits is cognitive freedom. Fear, stress, and emotional noise drain mental energy. But when you detach from outcomes, your brain becomes sharper. You think more clearly, you analyze more effectively. You start seeing patterns and opportunities without emotional distortion. The second major benefit is patience. One of the hardest skills in trading is waiting. Waiting for your level, waiting for confirmation, waiting for the right conditions. A trader overwhelmed by emotion feels pressure to act, but a trader with apathy feels no rush. Patience becomes natural because there is no emotional need to be in the market at all times. And the third benefit is resilience. The market will always test you. It will tempt you to break your rules. It will shake your confidence. It will challenge your discipline when you least expect it. Apathy becomes your armor. It separates your identity from the trade's outcome. It protects your psychological balance during volatility, drawdowns, and social media noise. A trader with apathy is unshaken, stable, grounded. Now that we understand the deeper benefits, let us move into the final essential piece: how to maintain this apathetic edge over the long term. Sustaining the apathetic advantage, your long-term playbook. As we enter this final topic, remember, apathy isn't something you master once. It's something you practice consistently. And sustaining emotional detachment requires intentional habits. A key tool is the regular emotional audit. Ask yourself weekly or monthly, did I let emotions influence any trades? Did I break any rules? Did I feel impatience, FOMO, or fear? Did I take trades outside my plan? Am I strengthening or weakening my discipline? Honesty is essential. Self-review keeps emotional drift in check. Another long-term anchor is reconnecting with your deeper purpose. Ask yourself, why am I trading? What am I building for my future? What matters more, emotional comfort or long-term growth? When your vision is strong, detachment becomes easier. Finally, community can help, but only with boundaries. Discuss strategies, setups, logic process. Do not discuss emotional outcomes. Protecting your psychological space allows community to support discipline instead of sabotaging it. In the end, the art of apathy isn't about feeling nothing. It's about freeing yourself from emotional distortion. It's about seeing the market clearly, It's about acting with discipline, consistency, and calm. When you embrace this mindset, fear loses its grip, greed quiets down, FOMO fades away, clarity rises, and your edge returns, not because the market changed, but because you did. This is the art of apathy. This is how you gain your edge back, and this is how you unlock a new level of confidence, consistency, and mastery in your trading journey. If this video helped you, make sure you subscribe to stay connected to content that strengthens your discipline and sharpens your mindset. This was The Silent Chart. See you in the next one.